Hey everybody, Chris Bober here with Team Bober at Nebraska Realty. And if you're watching this on YouTube, I would appreciate if you go up and click the subscribe button and even click the bell that will give you notifications when we put up great videos like this. If you're seeing this on a social media channel like Facebook or Instagram, please comment, like, and share it with your people so we can get our message out to more and more people. It really helps our algorithm, and we thank you for it. So today we're here to talk about the 2019 fall market update. And last week I had a presentation and an article I wrote on my blog that talked about the national trends that's going on in the real estate market. And the reason why I think that was important first is the national trends are an indicator of what's coming here next, right? Most of the time stuff happens on the coast, it eventually ends up here in the Midwest. So we're looking at that right now. Now, when you look at the national snapshot, there's basically three main takeaways from last week's article. Number one is mortgage rates remain at historic lows. That's really driving our market, especially keeping us kind of propped up because money is cheaper and cheaper to borrow against. Number two, prices continue to rise at a moderate rate. The pricing gap, and I'm going to show you a little bit of info here, but prices are going up more and more and more. The third thing is starter inventory remains very tight, right? We haven't figured out how to build cheaper houses, but we're seeing indications of sort of a recession on that end in the luxury markets. Those are really actually probably in buyer's markets, especially in large markets like LA and New York, but we're seeing that in the luxury market here in Omaha. Now here's an interesting little graph. I took this from Zillow. Zillow isn't a great indicator, but they do track all the sales. So they know what stuff sold for, and they have a great amount of data in there. So if you look at the average property value, this is in the United States. That starting back in 2012, it bottomed out and started going up and up and up. And this is the trend line that's been going on for about 7 or 8 years, going right like that. But then you look at 2019, it's slowing down. We got to 2019 right here. This is real data. The average prices started coming off that trend line and they're flattening out just a little bit, and they're projecting, this forecast is that it continues to slow down. Still going up, but it's not going up at the same rate. That might, I would say that's a pretty good indicator that there's some new stuff coming out here. Now here's our local market here. As you can see, these graphs here are 2019. We continue to underperform last year, the year before that. Overall, we're down over 6% in total volume. Again, a lot of units are down, prices are up, so that's kind of hedging down a little bit, but we are down overall. We're heading, in that direction. You might think, what the heck's going on? Why, if there's such a demand, mortgage rates are low, why are the number of houses being sold going down? Well, here's why. Fewer and fewer houses are actually going on the market. Now you look at coming out of the recession, we were at a high back in 2014. We had 5,500 houses on the market. That was a lot. A lot of active listings back then, and every year it starts to go more and more. And interestingly, this is the year that we sold the most amount of real estate in Omaha, 2017 going into 18. That was a record year, and we continue to have low inventory. Well, if you look at what happened and why, here's a graph. It doesn't come in great here, but this is the average housing starts in the country, right? You can see back in the 70s, 80s, and 90s, we had peaks in the middle of there. Here comes we had a little bit of a recession here. Going into the 2000s, we had a major recession right here. And the average the houses that were started and being built back in 2007, 6, 7, and 8, they were up here. We still have yet to reach that number of new construction. So we're still not caught up with the population demand from the mid-2000s. But here's the thing, the population kept growing. The population, people didn't stop having babies, stop getting married, stop having kids. People are living longer. This population demand is up here, but our need to fill that is up here, but we have not even come close to putting housing out there to keep up with our population. So the result is this right here. We had peak appreciation back in about 2017, and this is flatlining. You see, this is the lower trend line. This is only up 5.7%. Last year was up 7.5% as far as overall average sale price. So we are kind of flattening out, and then we have this major void here. The average price is about $350 for new construction. It is $225 for existing. We are not putting any houses on the market in this thing. We're not building any ones. We're building up here, nothing in here, and that's where the big demand is. So that's what's happening. So what's coming? You try to take this and extrapolate all the information and say, what can we say about this? Well, There's a recession coming. I think we all know that. We don't think it's going to be like the Great Recession, but to have an economy where for 5, 6, 7 years we have been so great, it has to come down a little bit. We know that's coming. It happens every time. Every great peak, there's a little bit behind it that isn't so great. That's coming. But the interesting thing is, last time the housing bubble actually probably caused a big portion of the recession. This time it isn't. It's actually just going to be affected by it, but not nearly as much as before. So the national economy, it's going to experience a decline. You know, you don't have to be a rocket scientist to figure that out. All the experts say it's coming. There's just local, national, and international, global factors that are setting us up for a little bit of a hit. We know it's coming. But the thing is, the experts can't agree on how bad it's going to be or how long it's going to last, right? A lot of things have been put in place to say that this might not be so bad, but it will affect us somehow. They also disagree about the timing. Some people say it's going to start next year. Some people say as far as 2022. It remains to be seen exactly how this goes down, but we do know there is a glitch coming in our economy, which will, of course, affect the housing market. So, but how will this affect you? Right? So my biggest my biggest takeaway is change is the only thing that you can truly count on. We know it's going to change. The question is, are you going to be in front of the change or behind it? So a couple things that I think will affect the local real estate market is property appreciation is going to start to slow down. You got to get that in your head. You can't count on a house going up 8 to 10% of value every year. It's already slowed down and it's going to stop happening. Don't bank on it. Don't do it. And I think that in the coming years, our market will be very different. It's a very weird set of circumstances that has put us in this extremely fast, crazy seller's market. Hasn't happened in a couple decades. It won't last very long. In fact, it's already starting to kind of go away. Just know that you will not automatically be able to sell your house for a record price coming into the future. I do happen to know, and I think I know who they are, and I've been told by several great people, but there is a big-time national builder coming on the scene to Omaha very soon. So someone to kind of bridge that gap between the 225 to 350, apparently this builder can build a lot of houses in that range. So it should be interesting to see that solution coming out. Look for more information coming as it becomes available. Right, so what does this mean for you? How are you going to do this? I'd say you have to prepare. You know, my background is as an athlete, professional athlete, is to have preparation for everything. Watch film study, lift weights, run, get strong, get in shape. You need to kind of take that approach with yourself and with your real estate. So the first thing is take advantage of these low mortgage rates. I don't anticipate us seeing mortgage rates like this for a long time. So even if you don't want to take advantage by selling, call your lender and maybe think about refinancing. There has to be a solution in there. Maybe take out some of your equity and make some improvements, because you need to prepare to compete. If you want to sell your house in maybe the next 5 years, it's not going to be as easy as it was the last 5 years. How do you prepare for that? Well, start updating those things in your house that you as a buyer are going to look at. The kitchens, the flooring, the paint, the countertops, appliances, things like that. Start saving up and start just kind of updating your house so that in the event that you do have to sell here in the near future, your house stands out among everyone else. Do not be caught off guard when your house is dated, and more updated houses are selling faster and for more money. And I also want to say, if you are considering retiring or you know someone who is, you really might want to consider selling soon, because you've built up this lifetime worth of equity that you should be able to take advantage of. If you were to sell soon, take advantage of the high market, find a temporary solution. I promise you there's going to be great deals coming up in the next few years for buying. Sell high now, give you a solution, and then get in there and maybe buy something for great deals here in the near future. Also, I would also consider talking to your financial advisor about that, because we are probably going to experience a hit in the stock market and all that too. So again, our mission, as you can see with all this information we're trying to provide, is to educate and empower our clients to make great real estate decisions. And if you want to know more information about what we do, teambober.com is our website. All of these blog articles and videos are going to be on there. Information about what we do, who we are, and the services that we provide. If you do want to contact us, you of course can reach out to us here, Chris and Jen Bober. There's my email, chris@nebraskarealty.com. You can call me at 312-5076, and of course go to teambober.com for any more information. So thank you so much for tuning in. If you have any questions, feel free to post them or call us and contact us directly. We'd be more than happy to help. Have a great day.